Let's talk about Lululemon. The stock is down 50% year to date. Lots of negative commentary around the stock right now. But the brand itself, what about the brand? Well, the brand has been doing, still does quite well. People that wear their stuff still like it. Although more recently there was a launch of a new legging, didn't go as planned, took it off the shelves, took it off their online stores. So that's definitely something that will affect them in the short term. But overall, the sentiment around the brand is definitely not the same as the sentiment around the stock. That's very important to understand. As I said, right now, year to date, stock is down 50.4%. In the last 5 years, the stock is still up 32.58%. Right now, with the 50% pullback, we have a market cap of $31.6 billion and a forward PE of 17.5 times. EV to sales, next 12 months, 2.9 times. And if you look at what the analysts are expecting for the coming fiscal years, around 10 to 11% growth year over year for sales, and EPS growth growing around the same rate. Now, with that said, it's true that over the last couple of years, revenue, of course, especially in the United States, have slowed down a little bit. But what has accelerated is international sales. What has also reaccelerated is, of course, free cash flow. Gross profit continues to go up. Net income is a bit all over the place, especially in the last couple of years. But overall, you can see that this business is still doing quite well. If we then look at return on equity in the last 12 months, 41.9%, return on invested capital, 28.38%, so that's all well and great. And despite all the downgrades or price target reductions and all of that, the average analyst price target, even after the recent drop here, still sits at $374, representing close to 47% upside from the price we're at today. Of course, their next earnings report is only at the start of September, so until then, things can change, and of course, things will definitely change after that earnings report and earnings call. So, what do we do with Lululemon? We'll have a look at what they reported not so long ago. We're going to look at the chart and a comment from some analysts. And so before doing so, like, subscribe, notification bell on, do all of that. We're very close to reaching 50,000 subscribers. So I really appreciate all the support. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So the last quarter was basically this. In the first quarter, we saw strong momentum in our international markets, demonstrating how our brand continues to resonate around the world. Guests responded well to our product innovations across categories, and we are pleased by the progress we are making to optimize our US product assortment. Looking ahead, we continue to have significant runway for growth and are confident in our team's ability to powerfully deliver for our guests in 2024 and beyond. And remember, even in this quarter, sentiment was already not that great, and again, they delivered. Overall, net revenue increased 10%. America's net revenue increased just 3%, but international net revenue increased 35%. As for comparable sales, Americas were flat, but international increased 25%. Gross profit keeps growing double digits, although low double digits, 11% to $1.3 billion. Gross margin increased 20 basis points to 57.7%. So again, overall, last quarter was a pretty good quarter. Guidance, there was a small miss here and there, but nothing too alarming. They also repurchased 0.8 million shares of their common stock for a cost of $296.9 million, and the board of directors approved a $1 billion increase to the company's stock repurchase program. So they still had $1.7 billion remaining. As for the second quarter, the company expects net revenue to be in the range of $2.4 to $2.42 billion, representing growth of 9 to 10%. And earnings per share is expected to be in the range of $2.92 to $2.97 for the quarter. As for 2024 as a whole, the company continues to expect net revenue to be in the range of $10.7 to $10.8 billion, representing growth of 11 to 12%, just as we've seen the analysts' expectations. It continues to expect operating margin for the year to be approximately 23.3%, and diluted earnings per share are now expected to be in the range of $14.27 to $14.47 for the year. They also still expect the power of 3 times 2. So the company's power of 3 times 2 growth plan calls for a doubling of the business from 2021 net revenue of $6.25 billion to $12.5 billion by 2026. The key pillars of the plan are product innovation, guest experience, and market expansion. And the growth strategy includes a plan to double men's, double e-commerce, and quadruple international net revenue relative to 2021. So again, as long as that goal does not get reduced, I think we're still good to go. As for some analyst commentary here, we had Lululemon downgraded as athleisure falling out of favor, breeze-through leggings pulled. And so the athleisure trend is showing of age and looks to be falling out of favor, with consumer leaving Lululemon much more vulnerable to decelerating spending trends and increased promotion activity in the category, fighting for the remaining dollars with competitors Alo Yoga and Vuori. This dynamic, coupled with Lululemon's execution issues and the tougher macro backdrop, led Citigroup to downgrade the stock to neutral from buy and cut its price target by 28% to $300, which is still higher than the price we're at right now. But in my opinion, since they still have industry-leading margins, there is still some room to play with regards to promotions if they ever want to go that way. As for a JP Morgan analyst, they say the innovation pause compounds execution risk. And without an inflection point based on new innovation launch in mid-year, the analyst lowers his price target for Lulu by 26% to still $338 and removed the stock from the analyst focus list. The analyst maintains his overweight rating, however, as the brand still has a place domestically and international and untapped opportunity. So again, you might think there is extreme bearish sentiment around Lululemon, the stock, or even the company right now. If you look at the commentary and then the price target, we're still way higher than the price we're at today. And so if we're looking at this stock right now, of course, huge pullback. We're now at $253, which was also at the lowest point back in May of 2022. And it was a small top here before the pandemic crash. Of course, a quick recovery happened after that, but let's not really use that period as a point of reference. But right now, I mean, we are extremely low. We can go lower, we can always go lower, but on the weekly, we are already extremely oversold. We can stay oversold for longer than you can stay solvent, but I do think there might be an opportunity here, especially for long-term investors, because if you talk to people that shop at Lululemon, men and women alike, they still like the products. So yes, I do think that right now $253, in my opinion, is an opportunity for the long run. And so overall, to conclude, as long as I don't hear extreme negative commentary from management itself, as long as I don't see huge red flags from their next earnings report and outlook, whether it's short term or their 2026 goals, I see no reason why we shouldn't, or those of you that hold a position shouldn't shop for cheaper shares. If you want to open a position in Lululemon, yes, I do think that now is a much better opportunity than before. You get a stock that is much cheaper today than it was a year ago, 2 years ago, despite the company becoming bigger and better. I mean, makes sense, right? Oh, I almost forgot. If we look at forward PE, EV to EBITDA, price to sales, price to free cash flow, price earnings to growth, you can clearly see compared to its 5-year mean right now, much cheaper. So again, it's pretty simple for me. Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.